Well, hello there. Welcome to our September coffee chat. We'll hang out here for another minute or two before we get started for those hopping on, or maybe they're still grabbing their cup of coffee. And we'll get started here in a couple minutes. As we're waiting for other people to join us here on this September morning, if you have any questions, feel free to drop those down in the questions bucket, and we'll make sure we get to those throughout our conversation today. Welcome, welcome everybody to September Coffee Chat. We are seeing a few more people jumping on here, so we'll give it another minute before we get started. And as I mentioned, this is just an open chat with our advisors here with us today. We've got Jeff, Anthony, and Eric, and we've definitely got some questions already prepped and ready for them. But of course, if you have any, drop those in the question bucket below, and we'll make sure we get to them. And of course, if you stick around till the end, I hope you saw in our invites that we'll be providing you with a cup of coffee on us. So we'll see who the winner of that is at the end of our coffee chat here today. While we're waiting, I also just have to show you, for compliance purposes, some of our disclosure information. So take a gander at all of that. In a nutshell, this is just an open Q&A forum. This is no specific advice for you based on your scenario. That should be a one-on-one conversation with your advisor. And these are just the opinions and thoughts of our advisors as they stand today.
Are we recording?
Yes, we are. All right. Well, let's go ahead and get started with our first question of the day, and that is, we're going to start with just a little poll question to see if everyone is paying attention and they're ready for this morning. So you should see that just pop up on your screen there about like, what is your favorite coffee? Or if you even drink coffee, or do you have your cup of coffee ready? All right, I see a few answers coming in. Water, yes. I'm a tea person. Team, what do you guys have?
Well, I've already had 2 cups of coffee this morning, so I'm going with water right now.
All right.
Yeah, if for those of you on the call who haven't been to our new office yet, we have a very fancy coffee machine that we have access to. So today, I'm just drinking black coffee, but I am known, whether it's here or working from home, to make a quick run out to get, a latte or something. So that's probably my preferred drink of choice.
One of my coffees that I look forward to is a large McDonald's coffee with 1 cream and 1 sugar.
Okay.
Excuse me.
No, I'm just like, okay, this is very specific.
And otherwise today we have from our fancy coffee machine a little latte going, but like Eric, this is my 3rd cup of coffee so far this morning, so it's a decaf.
Okay. All right, there we go. Well, thank you everybody for playing along. We'll go ahead and get started here now. And with our first question of the day, the most anticipated one goes to Anthony. What is married life like?
Yeah, well, so for those of you who may not have heard, and if you follow our socials, you've probably seen some pictures, or if you'd like to see some pictures, you can check us out on Facebook. But just over a month ago, I got married. Emily, my wife, is a teacher, and we actually over the summer just moved to Hastings, Minnesota, which is halfway between here and her teaching job, which is down in Red Wing this year. So a lot of new stuff happening. We moved. She started a new job. I mean, our group moved offices and the wedding. So on the one hand, it feels nice to have all of that in the rear view mirror where we can now say, let's just, get on with living here. But I've been telling people that, that I think the best thing about it is it really doesn't feel like a change to me, which I'm taking as a good sign. It doesn't feel like there's anything, crazy different about it. It feels like we're still the same two people and we've, just crossed another threshold. So it's been going really well. And, now that the school year started, we're seeing less of each other than we did in the summer, but we've had years prior when we were dating to go through that. So we're pros at that now. And yeah, we're looking forward to our first holiday season together.
Nice. And must have been your first Christmas.
My babies are growing up.
Oh.
Yeah.
Oh man, speaking of babies, Eric, how's Miss Adeline?
Adeline's doing great. So she finally sleeping through the night. So that's a really great thing for us as parents, myself and Chrissy. And then just the calmest little baby you can ever experience this morning when she woke up. Just kind of a nice little singing in her crib. So
Wow.
no crying, just like, Mom and Dad, I'm awake, I'm ready. And so it's just enjoyed to have her around. And then our son Peter, he's 3, and just is absolutely in love having a little sister. So just watching them together has just been so fun.
Nice, that's awesome. That's very cool. And that's, I think, a testament to you guys as parents too. If your kid can wake up and not be crying, that's like high five. That's awesome. Jeff,
Yes.
how's the golf game this summer?
Golf has been actually a lot of fun. The drought has been horrible for the farmers, but having an opportunity to count on the day being nice when you go out to play has just been great. It's funny how things cycle from, this is a terrible question for me because it's a long answer, but from the standpoint of in the beginning, you just want to get warmed up and then all of a sudden you think you've got it figured out and then things start to fall apart. And so hopefully I'm in the rebuilding stage once again. And I hope for a nice long fall to give me an opportunity to continue to play. So it's been really an enjoyable summer.
That's fantastic. I know the weather's been great recently. My son and my husband went golfing on Sunday and they loved the weather. That was a great time to be out golfing.
Heard we had a junior driver.
Oh yes, yeah. Luke was very excited to say that he drove the cart.
How fun
He's
is that?
5, so that was a big deal for him. Yes. All right. Well, moving on to some of the pressing questions that our audience here had today that submitted before our coffee chat. But of course, if you have questions along the way about anything, you want more tips about Jeff's golf game, what kind of driver he uses, you want to hear about Christy and Eric and what they've got going on with their little ones, or you want to hear about the moment Anthony cried at his wedding. I don't know if he actually did. And I'm just saying, if you'd like to know if that happened, feel free, drop those in the question bucket. That's what today is all about. But there was, Jeff submitted a question, and he asks, in like a relative short time, I've been a client, Stein Financial Group has been under the umbrella of ING, Aetna, and now Cetera. So I knew ING and Aetna was just like a name change, but knowing all these different consolidations, and they've happened so many times, and they give professionals access to more products and different technologies, but like, has there been any measurable results for clients? And so that's the question that I was going to see if Jeff wanted to take, because you can really bend the one around for all those changes. And can you really talk to maybe the value clients have seen from these changes?
That is a great question. Why did we decide to make this happen? Because change is painful from the standpoint of having to learn new systems, having to get up and relationships change. And certainly I've had over 35 years worth of a relationship with kind of a single entity, because I started with Aetna, which turned into ING, which then turned into Voya. But the reason for making the change is we felt that the individuals we were working with were not getting everything that we'd hoped that they could receive within the industry. And there's no question that there's still things that buying individual Bitcoin and things like that, that's not going to happen. But as it would relate to a more robust or greater technology opportunities for our clients to be able to access information, their individual accounts, things like that, a greater choice as it would relate to investments. Now, we still are true believers in a lot of the core pieces that you're participating in, but a lot of the items that we couldn't use before to help kind of fill in around the edges are now available to us. And our job is to always be your advocate. And that's what we're doing, is creating an opportunity for you to be the best you can be as it would relate to your financial lives. And we've been thrilled up to this point with the outcome. Yes, it's taken time to adapt to the softwares, and the new office space is just outstanding, so we can't wait for each of you to have an opportunity to come visit with us. But all that being said, it was well worth it because it greatly benefits each of you, and as a team, we feel like we're in a much better environment to help fulfill your goals and dreams. So I'm really pleased that we made the move.
That's fantastic. I love how you just sort of framed that up at the end there, and just that it not only does that technology allow us to serve our clients better, to serve you guys better, but we do have opportunity to give them even more, maybe that they weren't even aware of, that they wanted or needed. I think that's great. So Bill also submitted a question, and his was, can you give me an easy to understand breakdown of fees? Anthony, what do you answer to that?
Yes and no, right? Because your fees depend on what you work with. But let me do it in as simple and as quick a fashion as possible. We at Stein Financial Group have a number of different options available as far as what type of investments that we may recommend to you. And really, it depends completely on your situation. There's not a one-size-fits-all solution for anybody. But depending on the answer, it generally follows this pattern. One is, there with Stein Financial Group is an advisor fee. That is our office's fee, and that covers everything to do with your account. Calling in, asking questions, getting distributions, making trades, withdrawing money, putting money in. None of that, once you're in the account, costs you anything other than that annual fee. So there's no transaction costs or little nickel and dime fees. Then, depending on what type of account you're in, there are fees for the individual investments. And those are not for us. That is for, if you have an American Funds mutual fund, American Funds charges a certain charge to use that fund. And again, what those charges are depend on the person. Our fee, the advisor fee, starts at 1.25 and works down based on how many assets you have with us. The fees for the individual funds usually are not very expensive. In fact, that's one of the things we look at for you, is to try to say, well, how can we get the right investments, but for the right cost? And so ultimately, to know your specific answer, we need to give you your specific information, which we're more than happy to do, by the way. If any of you are curious about your fees, we will absolutely send you a breakdown, not only of, okay, this is the percentage, but we can even send you the dollar value if you like to look at it that way. So please don't hesitate to reach out for that. The bottom line, and this is the question I ask myself, and the question everybody asks about fees is, well, how much is too much? And my question back is, well, I just want to make sure we're getting what we're paying for. So I'm not, fees are what they are, but if we're getting what we're paying for, that's my ultimate concern on your behalf, is to say, yes, this has a fee to it, but I think it's going to be better than the other option, let's say, because of X, Y, and Z. Maybe it has better performance or less risk, or could be a multitude of reasons. But ultimately, we have a fee as an office. We also do financial planning, and that comes with a fee as well. And then the investments themselves, and they have fees, and that would be the same if you were, on Robinhood, on the app, or with us. So that's as simple as I can get right now. But again, please don't hesitate to ask if you're concerned about it, or you just want to, get up to speed on it. we're more than happy to provide all that info. And at one point when we signed up for the account, we went over it, but I realized that for a lot of you that may have been a long time ago. So we're happy to refresh.
I do want to ask you one other question, or at least help you, or hope you'll clarify. We are under an obligation to select the least expensive solution that's appropriate for a particular issue.
Yes. So we have what's called a fiduciary obligation, and that means we have to act in your best interest, not just in an ideal world that's how we're acting, but actual law, actual regulation requires us to do that. So cost is a huge factor into that, right? If we can do the same thing with two different investments, for example, but one is cheaper, we're going to pick the cheaper one because A, that's the better option for you, but B, that's what we're required to do. So we take into account cost as an extremely important factor. It's not the only factor, but it's an extremely important factor when we're making recommendations and saying, hey, I think this would be a good option for you. So it's a huge piece of the puzzle for sure. It can get complicated when you get into the weeds. So that's why we have to do it individually.
Yes, I think to say that shortly is just at the end of the day, if you're gonna work with an advisory firm that's gonna do things on your behalf, fiduciarily on your behalf, in your best interest, there's gonna be a fee, and then your investments are gonna have a fee, and that's just frankly the world we live in. And then planning can have a fee on top of that. At the end of the day, it's what kind of value we're giving for those fees. And of course, we always want to be making sure we're giving the best value as possible. So if you ever have questions about that, or you have ideas or suggestions of ways we could be providing more value, we absolutely want to hear that from you, or have you guys reach out. And like Anthony said, we can show you guys those fees and what that value is that we provide. So yeah, that's a great question, Bill. So thanks for asking about that.
I do have one more point of clarification. Investing is kind of like your paycheck. It isn't necessarily as important what I make. It's nice to make a significant amount of money, but what am I taking home? And from that standpoint, we show you those comparisons all the time on a net basis. So after all expenses have come out, how does what you're doing compare with whatever we're comparing it to? So that might be the larger market, the S&P 500. It might be something more specific that directly relates. But if we are, and we have been, tracking with the market, but with substantially less risk on a net basis, so you would have made the exact same thing, but with a whole lot less risk, isn't that a win? And isn't that what we're looking for, so that you can have peace of mind in regards to your money, and yet have an outcome that you're comfortable with?
Yeah, I think that's a great segue into just the next question that I've got here on the list, and that's for Eric. And just like, what is market volatility and why is it a good thing? I think that points right to what Jeff was just summarizing there in the end, is that if the market is doing this, and we can get you that same returns, a lot less risk, and a lot better consistency, doesn't that make you feel a little bit more secure, more comfortable with what's going on? So like, what is that market volatility? Is it a good thing? What is it? How does it work?
Yeah, so market volatility, kind of that, when you think of risk, that's market volatility. And so everyone likes market volatility when markets are going up. So when markets are going up, we get the benefit from an increasing market, and that's still volatility. The concern for most people is that downside, the risk on the downside volatility, or the risk involved there. And so as we continue to work with our clients, it's asking those questions. What level of risk are you comfortable with, so that when market volatility goes up or down, what level of risk are you comfortable with? And from that, there's opportunity involved with, when there's choppy markets, there's opportunity. And part of that preparing for the risk and the volatility is, when markets are going down, can we stay at a level of risk where we can stay invested and not sell necessarily at a bad time? But then that also might be a great buying opportunity, because historically, when markets go down, eventually they go back up. And so that market volatility can provide some great value for individuals that, let's use the individual that's currently ongoing contributions into their account, if you keep making your payroll deduction or your just systematic contribution into your account during those periods of market volatility on the downside, you're buying more holdings or more shares at lower prices. And so that benefits you. And when we get that recovery, now you end up in a better overall position. And so market volatility, that's part of being invested. There's the good and the bad that comes with volatility, and it's being able to withstand those downsides when the markets are declining and being able to be comfortable with the level of risk you're taking, so that long-term, historically over time, markets go up and that we can stay invested over time, and continuing to find ways, how can we reduce that downside risk while still participating on the upside risk? Because upside is a risk as well, but that's where we really get to enjoy and benefit from.
Yeah, no, I think it's a very good point to point out that upside end has risk too, and that is considered volatility. That's great. If anybody else has any questions, make sure you pop those in. Otherwise, I do have a group question for you. Or no, not yet. I have another question for Anthony first. If like I have money in a CD or a savings account, is that a good thing? Is it a good strategy right now? Should I keep it in there? What are your thoughts?
Yeah, one of the most popular questions. Everyone, I think, on this call knows someone who's got, hey, I have this money in savings. I haven't really figured out what to do with yet. I'm not really sure if I should invest it or not. Or you know someone who's got CDs right now. And there, again, there's no one size fits all answer. But in general, with the way interest rates are right now, most of you know you're not really getting anything on your savings account, right? At the end of the year, you get your tax document that said you made $5 that you have to report to the IRS, and that doesn't feel very good. It doesn't for me. And then also on CDs, the added downside of locking your money up for a year, maybe that's not an issue. Maybe this is long-term money anyway. But CD rates are also extremely low right now. So basically, the savings and the CDs are excellent at protecting what you already have. But if we're looking for growth, even a small amount of growth, they're probably not going to be the best bet. And if you've got some extra money sitting there, it's probably a good idea to invest it, even if it's invested conservatively. Now, the most popular way to do that we found is you can open up an investment account. You can pull the money out whenever you want. So it's not a CD where you have to lock the money up for a certain period of time. So it's totally liquid from day one. But the investments you can choose can be anything. They can be some aggressive, some more conservative. The most popular one, though, is Minnesota muni bonds. So Minnesota municipal bonds. And that's most popular. First off, for people who live in Minnesota, that's the most popular one. I'll explain that. So Minnesota muni bonds are bonds, which are just like any other bonds that you would buy, but they're issued by Minnesota municipalities. So when your local school district has a bonding issue, for example, those would be Minnesota muni bonds. Hospitals do it, universities, cities. I mentioned hospitals, like the Mayo Clinic is a big issuer of this. So you, by owning those bonds, and you can do it through a mutual fund, so we don't have to go pick individual bonds, we can get a diversified mix. You get the interest that those are paying you. Right now, it's a little bit lower across the board because interest rates are low everywhere. So, but generally 2 to 3 to 4%, in that range is what they pay. Now that interest is tax-free to you, federal and state, if you're a Minnesota resident. If you're not a Minnesota resident, even Minnesota muni bonds still have the federal tax benefit. You just, to get the state tax, you have to live in the state that you're buying the bonds from, is basically how it works. The bottom line is, it's a way to get a few percentage points more of interest, being totally liquid and tax benefit to it. So really your 2% is going to feel like, 2.5%, because you're not paying any taxes on it. And the best part is you get the statement at the end of the year that says, you made $1,000 and it's non-taxable income. Your report at the end of the year will literally say that. And that, alternatively to the bank statement that says you made $5, getting the report that you made whatever tax-free feels a lot better. So that's one of the most popular options. It's conservative. It's not quite as conservative as a bank account, but it's not in the market at all. So that's maybe the most popular option. So if you have some cash sitting there, if you know somebody who does, it's at least worth looking at. Maybe the safety of a bank account is still the best option for you, or a CD, but it's at least worth looking at and considering with some of that money. And it's super common question we have right now, so it's important one.
I do have a follow-up question, by the way. And I don't know whether Eric or Anthony, you want to answer this. Why is growth important? Why shouldn't I just leave it locked up in that savings account, get my FDIC insurance if I'm in a bank, you know, what is it, 250,000 or something, versus why would I want to be in a municipal bond fund or a regular bond fund or a conservative stock account? Why growth? Why am I going to expose myself?
Yeah, well, and you're skipping right to the goods, Jeff, because we haven't mentioned the I word yet, but we're going to. I'm sure those of you who tuned in are waiting for it. Inflation is the I word that I'm talking about. And the big reason why growth is important is inflation, as we talk about even more these days because it's been picking up, is the gradual rise in prices over time. But what it means, why I'm bringing it up right now, is that over time, a dollar in your hand or in the bank loses a bit of purchasing power, right? A dollar buys less than it did 20 or 30 or 50 years ago. And that will continue most likely on into the future. Obviously, we can't know the future for certain, but that's been the trend. So leaving a dollar or $1,000 or $10,000 in the bank means that you're collecting your 0.0001% interest. But with inflation going up 3 to 4%, as it has right now, or even 2%, like it has been more recently in the past, you are losing each year because things are getting 2% more expensive, but you are only making 0.001% on your money. So actually, in terms of real dollars, you are losing money with that. And that's why long-term growth is important. Now, I don't want to discount the safety because you mentioned the FDIC insurance, and that's a huge reason to keep some money in cash. It's insured. It's also very accessible. But long-term, if we use the bank as our long-term investment tool, we're going to lose real dollars. We're going to effectively lose money as inflation erodes our purchasing power. So that's the big reason why growth is a huge deal long-term.
What about the TLEC as a tax?
Yes. So do you want to cover that, Eric?
Sure. So Jeff kind of brought it up before. It's not what you make, it's what you walk home with, what you take away. And as we look at different accounts, it's part of that equation of what you come home with is what's after tax. And so anything that is a taxable account, you make some growth, you pay your taxes, and that's what you walk away with. When Anthony was stressing the point of tax-free income for municipal bonds, all that interest that you're receiving from these debt payments from these municipalities, that's all tax-free. So you actually walk away with that. And so if you are earning, I'll use the example of 2%, but then now you have to pay tax on it, or 2%, but you don't have to pay tax, you walk away with quite a bit more after tax on a tax-free benefit. And so as we look at all the different parts of an investment portfolio, it's what is the tax impact? How does inflation play into this? What's the risk factors? So like what is the potential downside? What's the upside of potential in that type of solution? And all those and what's the cost? We talked about that before. All those pieces go into putting together a portfolio. And so yeah, tax and inflation are critical parts of a financial picture.
Yeah, I think that's been a great discussion, guys. I think to wrap it up in terms of where we started here, and if we have money in a savings account or in a CD, and is that a good thing? First of all, it depends on your situation. Do you need that cash to be liquid for a specific short-term goal, or are you really looking just to protect that money and protect it against inflation, protect it against maybe taxes? Like, what are those things that you want to make happen with that money? And that's where having a conversation with one of these guys is going to be really valuable in terms of like, what is your actual objective with that chunk of money, and making sure it's going to the right place, whether it's munis, whether it's maybe even more growth, maybe it's not, maybe it's for a short-term home improvement project, so we just keep it in cash. You know, just making sure we understand what that bucket is for, I think really kind of sums that up in terms of like having the right discussion and understanding what would be the best place for those funds. I know we are up at 10:30, but this has been a great discussion so far. So I'll keep going with a few more questions. I understand if a few of you may have to jump off, that's cool. We did ask a poll to the group, and it sounds like everybody in the group, it was a unanimous no, that no one, at least on the call today, has money, like just sitting in a CD, maybe not getting very good rates, or even go backwards because of inflation or taxes. So good job to you guys. If you have some cash, though, you want to have a conversation, of course, these guys are the ones to talk to. Let's see. Next question here. Actually, I was going to ask Eric here. Should we be preparing our investments for a Delta variant shutdown or maybe a market pullback?
Well, so yes and no. Like I say that with the idea of over time, historically, markets pull back every year. And so to expect a pullback, yeah, at some point, I would definitely expect that. And so going back to that idea of volatility that we talked about, like that's part of being invested. There's volatility. We'll see a pullback at some point, whether it's a Delta variant, whether it's something else related to COVID, or something else completely that we don't even know about yet. At some point, we'll have a pullback because that's just the nature of markets. They go up and down. And so being aware of those things is important. But long term, we do believe that we still have room for growth ahead of us. And so we're not like pulling out because of those things either. And it goes back to the just making sure that we're invested appropriately risk-wise and time horizon. So if you have something where you know you're going to need funds sooner rather than later, well, then those dollars should be on the more protected side of things so that that volatility, we are protected from that. But for the long-term growth, we do believe we still have that ahead of us. And so we'll see what happens with the Delta variant. We'll see what happens with all these different things in our world. But at this point, we are still positioned for, we do believe we have room for further growth and being prepared for a pullback at some point, but we don't believe that's going to derail from the different plans that we're positioning for investment-wise.
Yeah, absolutely. And then just as a reminder, we're coming into our fall review session. And so if you are having questions or concerns about your accounts and are they really set up in the correct manner to handle potential drawback or market movements, market volatility, if you have questions about this, this would be the perfect time for you guys to go ahead and schedule that. And we can have a good conversation with any one of these guys. So another question, this one's to you, Jeff. It's an easy one. Why should I sign up and utilize the client portal? Like, what is the value of that?
Well, you know, knowledge is power. That would be the first thing. And too many of us tend to live our lives hoping and wishing and thinking everything is going to be fine just because I want it to be fine. The answer is that this portal is another access point, and it's something that we never had with Voya, that will allow you to put in as much or as little information as you want. But whatever you put in there will be updated on a daily basis, and in some cases more frequently than that. And it's going to give you an idea of where you're at and what's going on. So whether it's simply the monies that you have with us or something more substantial, like I want to know my checking account balance in there, my savings account balance, my credit cards, my frequent flyer points, all of that can be tracked. And there's no cost for it. It has nice little features attached to it, something called a vault. What's a vault? Well, we know what it is, for example, if we have one in our home or at the bank. But in this case, it's a repository that will allow you to put in documents, pictures, things like that, that you'd like to retain over time, retain safely and without having to worry that somebody else is going to be able to have access to it. So it's a really powerful tool that is available to you. It's available at no cost. I can hear some gears turning in people's heads going, oh, but I don't want to go through setting this up. We're here to help you every step of the way to put that together. And the feedback we've gotten up to this point from the people that are in it are that they love it. Two is that working with Kim, setting it up is a pleasure. So it's not terribly difficult. We're here to support you with it. It's a great tool, and I strongly encourage you to take advantage of it.
Well, thank you for those kind words, Jeff. I would agree. I have my personal stuff all set up in the client portal. It is pretty cool to be able to see your whole financial picture in one spot and have all of your accounts right there. It sure makes having a conversation with your advisor really easy because they can just see everything and see what's going on. And yes, you can absolutely, if you haven't gotten your client portal set up, and it looks like from our poll that those attending today have not gotten their client portal set up. So I would encourage you to reach out to me. You can email or call Margie, whatever you want to do, and let us know that you're interested, because we do have to send you a very personalized link to get started. And then you could definitely set up some time with me and I'd help you get everything linked up and ready to go if that's really something you'd like to do. All right, we'll go a couple more questions here. We won't go too far over time. Going back to Eric, because we kind of talked about inflation already, so we're going to skip over. And Eric, what is this Good Life program we've been talking about and communicating about?
Yeah, the Good Life program. So we just heard knowledge is power. The Good Life program takes that one step further. So it works well with the portal as well. But what the Good Life program is all about is we all have these goals, these visions of what we want our financial future, well, both now and in the future, to look like. And so from there, this Good Life program takes these goals, these visions, and creates a strategy to go along with it, to create confidence that both now and into the future, ourselves, our loved ones can be taken care of, and be assured that we're on the right path for what our future looks like. So it's our financial planning service, and in that, we take a look at the investments, we take a look at the estate. So if something were to happen to me, are my loved ones, is my spouse, is my children, are they going to be taken care of? Do we have a will? Do we need a trust? What does that all look like? That's part of the Good Life program. Are we properly insured? So whether it's life insurance, long-term care, that's a big one. If I needed to go into a nursing home or assisted living or have care come to me, do I need it? What amount? How does that all work? We look at that part of the Good Life program. And we also, some of those goals, hey, I'm looking to buy a new vehicle. How should I do it? Should I finance it? Should I pay cash for it? Should I pull it from my investments? If I'm pulling it from the investments, where do I take it from? All these types of questions are part of the Good Life program, where it's financial planning that takes a look at the entire financial picture. And so going along the lines of the client portal is now we have the data, we're adding in a lot of the lifestyle aspects, and we're providing guidance and advice and recommendations and potential courses of action based on all these different aspects of your life for financial planning, life planning, put that all together, and that's a high-level overview of the Good Life program is all about.
Yeah, I think that's great. I also think this sort of rounds out the question that Jeff submitted prior to our session today about what is the value, and do clients really see value from all these different changes, and us making that decision to move to Cetera, like Jeff was talking about, and that we're finally now with an organization that supports more of the value that we'd like to add to the great services we already did with our assets under management, and that Good Life program is a big piece of it. The client portal is a big piece of that, and really being able to bring more and more things together to be able to provide more and more value to our clients. So lastly here, we're coming up on 10 minutes over. We'll stick around a little bit. These next two questions are going to be about the In the Room event, the heroes of 9/11. And we're just going to kind of just talk about that event and what people thought about it and what their feelings were. A big resilience was kind of the word that sort of transcended throughout that whole event, and what it meant to be resilient during the time of 9/11 over the last 20 years, maybe resilience again here now in our new world of COVID, and what that means. And so I just had a few little questions for our guys just kind of about that we could just maybe talk about. So the first one I'll hit up is Anthony. How has the COVID-19 pandemic changed the way maybe you invest, or that you think about your risk tolerance being increased or decreased because of that?
Yeah, I think two things. I think one, it's highlighted with bold emphasis the idea of It's about time in the market, not timing the market, because the COVID-19 pandemic, if nothing else, market-wise anyway, was a shock to the system. And those who were able, and this was kind of where we came down on it as a group, those who were able to stay in, even as the market sort of fell out from beneath us, were able to benefit the most because it came back so quickly. And we, once it had already dropped and we were kind of looking ahead, we said, okay, I do think this recovery may be quick. So it really highlighted the importance of being able to stay invested, even during periods of volatility. Now, the second piece, as far as kind of what our outlook going forward is and kind of where that put us, was the market bounced back so quickly. And as most of you who have looked at your statements for 2020 or even so far in 2021 have seen, the market did very well over the past year and a half. And in total, certainly we had a big drop during COVID, but it came right back up and it shot up after that. That starts to make me think, okay, when do we get to a point where we feel like, okay, we've made a lot of our gains and now it's time to protect? That is a question that we ask ourselves and we talk about internally quite a bit. And as Eric alluded to when we talked about volatility, I don't think we're necessarily there yet where we need to batten down the hatches necessarily. And I don't know if we'll even get to that point. But the fact that the market has increased the way that it has means that we as a group are putting a lot of scrutiny on, okay, what's going to happen this coming year? Is it time to add risk or is it time to de-risk? And there's no, again, one size fits all answer there, but I do think in aggregate, being comfortable with your level of risk is incredibly important now more than in the last 5 years maybe, because we've had this nice run up where the market's done well. We need to get you into a place where your risk level is comfortable for you so that if and when we do see a market correction, and those happen about once a year, that you're going to say, hey, I'm in a level of risk that I'm comfortable with and I can handle this. Because again, it all comes back to the big lesson we learned from COVID, and we knew this before, but it just reiterated it. It's not about timing the market, it's about time in the market. And if we can stay invested even through periods of volatility, that's what's going to lead us to the best outcome long term.
Awesome. Thanks for that. I think resilience, time in the market, staying resilient, staying true to that risk tolerance, making sure it's right, holding true to the fact like market volatility, what Eric was commenting about is markets will go up and they will go down. And that's where the value is. And then the time in is being resilient with all of that. Continuing with that theme of resilience, Jeff, do you see resilience as a quality that someone can learn or develop? Like, if so, how? Maybe what small steps do you think you can take toward becoming more resilient at work or in life?
An incredible question. All right, and I guess I will answer that question as in maybe, yes, but at the same time, it's not something that I feel you need to do on your own. So if it's just me, and all of us, I believe, have been in this position where something has happened. It might be a health issue, it might be a financial thing, it might be something family-wise. Right away, we start spinning a lot of negative thoughts in our head. Now, one of the best things that we can hear after meeting with a client is, I came in so nervous and I feel so much better having met with you. So as it would relate to resilience, it is important to continue to work on each of our own personal attitudes and how we look at things and try to see as often as possible that glass being at least half full as opposed to half empty. But please also know that if there's an issue, pick up the phone, call us, send us a note, set up a time to come in so that we can look at this in a more cold, calculating fashion, take away the emotional side of it, and almost always we're going to find that the way we've set things up for you, and I can only relate to financially, is something that's going to allow you to navigate whatever you're going through at that point in time. So is resilience something you can learn? I don't know. But I know it's something that working together, we can support each other and provide that resilience that's going to help create a more successful outcome.
I think that's spot on in terms of like resilience doesn't have to be something you do alone, or and I think about that in terms of how it relates to the event, the hero, the 9/11 event, COVID. It's our nation being resilient, right? It's not any one individual just being resilient. It's about all of us being resilient. It's about leaning on the people, your trusted advisors, your trusted other folks on your team that you look to for advice, and just having that resilience together and working through things and where we're at. I think that's spot on, and it's not something you do by yourself. Yeah. Eric, does a hero have to perform a great act to be qualified as a hero?
Also a great question. A lot of times, like when I initially think of the word hero, I go to the idea of superhero, so it's like they perform that great act and that's what makes them a hero. But the more I think about the word hero, it's anyone who's putting themselves out there to help someone else. And so we have heroes all around us, like, and we've seen so much more of that throughout the last handful of months throughout this pandemic. We've had teachers that continue to put themselves out there, figuring out how do I do work from home or remote work, hybrid, in person. We've had individuals that continue to show up to stock our grocery stores, to keep the food available for all of us and all those essential goods. We have heroes that are like our service people, are the police, the fire, the medical. All those people are constantly putting themselves out there to help other people, and like that's heroic, to really put yourself at the service of others to benefit those around you. And there are those moments, like those mountaintop moments that create those stories of here's the heroic moment. But going back to the idea of resiliency, the person who does it day in and day out, even when they're not recognized, that's amazing. And so the more I think of hero, it's those people that are really putting themselves for the service of others, not for their own benefit, but for the benefit of others. And maybe they do, maybe they don't get recognized for it.
That's fantastic. I think that's where we're going to end today, on the note of that every one of us can be a hero in our own way, and that resilience is something that, you know, as humans, a lot of times we just have to have because of life, but together we can get through a lot of things, and counting on our trusted advisors to help us along the way. So that's going to wrap up our coffee chat today. Thanks for those of you that stuck around with us here till the very end. And I'm sure it's because you were waiting for me to spin this fancy wheel so you could win a free cup of coffee. I'm sure that's why you guys stuck around. So with that, I'm going to share my screen here. Oops. Hang on a second. I'm not sharing the right one. There we go. All right, so I think I got everybody on here. At least I hope I did. But with that, I'm going to hit the little spinner here, and let's see who's getting our free cup of coffee today. Susan. Woo-hoo.
All right, congratulations.
Awesome, Susan. We will be sure to be in touch and get that cup of coffee over to you for joining us today for our September coffee chat. Thanks again, everybody. We'll see you in 3 months for our next quarterly coffee chat. So have a great morning, everybody.
Thank
We'll
you.
talk to you later. Bye.
Bye.